Welcome to the FNO InsurTech Podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsurTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world. Welcome to another terrific edition of FNO InsurTech. Dogs barking in the background.
You have to smile, Rob.
All kinds of weird things going on today. Welcome to our crazy world. One of the big things going on today is Hurricane Idalia.
That is true. That hit this morning.
Hurricane Idalia hit. Give us a quick rundown on it, Lee.
Well, it hit Florida. It had grown to a Cat 4, and I think it made landfall as a Cat 3. But that's a major storm. Yeah. That's a major storm, and it hit up there in the Big Bend area. So now we're all just watching it. We're waiting to see after it passes through what happens. Yeah.
Super, very lightly populated area, thank goodness. We think our good thoughts go out to...
Yeah, thoughts and prayers out to everybody who was affected.
People who live there. And we'll, of course, be responding to that as Alacrity, our owner, sponsor, and employer.
Yeah.
Right?
And all around good guy.
Right? Do you think people know what you do at Alacrity?
No, I don't think they do.
We've never talked about what you do at Alacrity.
No. Well,
is that because it's not interesting?
I think
nobody really wants
talked
to know.
about it. I think we've talked about it.
Have we really?
Yeah. Yeah, I think so. I mean, I pay attention, and I think we have. But
what about what I do at Alacrity? Have we ever talked about that?
We can't explain that. We can't explain that. That's a difficult one to explain. I've worked with you for a long time, and I'm still trying to figure that one out.
What's difficult to explain is why I still have a job.
Yeah. No.
That's what's difficult to explain.
Well, I think you're a very special person and do something very special that I'm sure makes a big difference.
I had a thought that came to my mind when you called me a special person, but I won't follow that up because it would be not politically correct, number one. Number two
please don't.
My main job is to be on this podcast with you and to keep you on track.
Well, I appreciate that because I do sway sometimes.
I think I do a really good job of it.
You do a good job. You do a very good job.
In fact, our audience will not hear, I don't think, in this episode where Lee asked a question that was out of bounds.
I don't think it was out of bounds. I think she handled it very well.
Handled it.
I did ask what the secret sauce was, and she deflected quite well. I thought that was a great response.
You know, it's interesting, everybody, when you're doing a podcast, in our industry anyways, when you kind of get up against that boundary between what people are willing to talk about and what they're not willing to talk about their businesses, we always try to get near that line, but we never cross it. Never.
Try not to.
And the few times we have, we've been told that that's happening. And we had one of those on this interview. You won't hear it on the interview, but Lee crossed over the line and got a smackdown. It was great.
Well,
it was great.
For those of us who are the media, we got to try.
Is that what it is? We're in the media. We owe it to our listeners.
We do. We owe it to the listeners.
So you listen here, listeners. We're on your side.
We're the media. We're here to get the right information that you need to make an informed decision.
So let us tell you who we had in the hot seat today.
Please.
Bobbie Collies, who is the Chief Growth Officer at Coterie Insurance, is with us today.
Yeah. I mean, Bobbie comes on and she tells us all about Coterie. Not too much of the inside information, but she is such a delight and she is a great interview. And we're going to get to learn all about what she does, what Coterie is, and how they're making a difference.
And I want you to listen to this because Bobbie's grasp of her job, of her business, of her clients, of where they're going, where they are, their value proposition is, I dare say, complete. It's really remarkable. This is an incredibly sharp person who we can all really learn from. Listen to this. Listen carefully. And so we'll turn to that. Let's get to our interview with Bobbie Collies, Chief Growth Officer at Coterie Insurance. Hey, everybody. We're here with our special guest today, a power woman in insurance. That's what I mean. The information doesn't lie. And you're all going to see why I said that in just a minute here when we start talking to Bobbie Collies, who's the Chief Growth Officer at Coterie Insurance, an old friend of the F&O InsurTech podcast. Great to have you here. Welcome to the show.
Thanks for having me. Excited to be here. Excited to jam and talk with you guys too. I'm going to be a whole lot of fun.
Jam. Okay, that's awesome. Where are you coming to us from today?
I am based in Wisconsin. I actually grew up in all of the regional mutual insurance carrier that exist in Wisconsin before I decided to jump over to the InsurTech side.
Where about in Wisconsin are you?
So I'm about halfway between Milwaukee and Green Bay. The greater MSA is called Fond du Lac, Wisconsin.
Middle of nowhere is basically what we're talking about.
I'm an hour from a major airport. So how's that?
Oh, wow. Okay. That's a commitment.
It is.
That's awesome.
Wisconsin is a hotbed. We just had somebody on the other day from Wisconsin. It seems like there's a lot of insurance going on up there.
Can you explain why that is?
Here's my hypothesis. There was just a lot of farms back in the day, like 120 years ago, that needed insurance. So a lot of these little farmers got together and formed all these small mutual companies, which ultimately grew into bigger, better things. So you have a lot of mutual companies that have a decent amount of market share in the Midwest that are based out of Wisconsin.
There's also, within the ecosystem, there's also like AmFam Ventures. And I mean, there's money there too. It's a pretty remarkable place, Wisconsin.
Yeah, it is. It absolutely. Yeah. Well, I think AmFam actually started as a farm insurance company too, like once upon a time. Yeah.
I know that in the day we used to do farm and ranch work for them. So I know that that's part of their DNA for sure. Yeah. So let's jump in and let's start by talking about Coterie so that we can level set on that. Now, we mentioned that we've had David McFarland on before. Who's David McFarland?
David McFarland is our founder and CEO.
There you go. And an all-around great guy, and like a stud, like buff, like I mean, when you see David, it's like, did you just walk in from the gym?
He did. He always did. He boxes. He has like one of those, like, what do you call it? Those ninja like obstacle courses in his basement. That he
does it really?
Yeah.
That's awesome.
Yeah. So, but yeah, David, he's my favorite recovering actuary that I've ever met.
And the funny thing about David is you wouldn't know that any of what you just said about him because he's like the gentlest, nicest, soft-spoken man.
Yeah, he's very his emotional intelligence is just as high as his like true IQ. I think yeah.
Must be a pleasure working with him.
Yeah, it's fun.
Yeah.
I can be super direct with him and not have to worry about any type of fallout. It's yeah.
I could see that. So. Then, in case you haven't heard our episodes about Coterie or you don't know about Coterie, the Chief Growth Officer, if anybody should be able to tell us it's her, is about to tell us about it. So please, it's all yours.
Yeah. So my elevator pitch on Coterie is we are working hard to change the paradigm on how small and micro commercial lines is transacted within the market. Truly, David's vision is to bring speed, simplicity, and service to that segment. A segment that's typically underserved because agents feel like it's not worth their time, right? Like it takes a lot of time and energy to quote with multiple carriers to get a quote back on a $750 BOP.
Right, to get this much premium.
Yeah. What sold me on joining Coterie is the fact that our model basically gives an agent a bindable quote within seconds, which ultimately means that not only does Coterie make money on this business, but our agents are able to make money, a lot more money and more margin off of the small commercial lines. We're using multiple third-party data sources tied into a proprietary underwriting engine that allows us to take a name and an address, digest that, and return a quote almost instantly. Agents at this point in time are able to override certain fields if the data is wrong. We're building data credibility models around our data sources. So we're starting to understand which data points are most credible from which data vendors. So our system's getting smarter over time. But yeah, it's been a blast.
So there are many companies that offer insurance to small businesses and to startups. We've had some on the Vouch, for example.
Mm-hmm.
Why are you special? Why should they do business with you?
Yeah, well, I think right now our biggest value proposition is our quote to bind. We've just made the unit economics on that small business a lot better. Currently, what's in the works, which I think we'll be able to actually wave a flag on and say, yes, this is another value prop for us, is our automated self-service capabilities. That's currently under extreme development and is going to be have a major impact on not only furthering the unit economics for our agents, but also for Coterie. So over time, we can scale this thing to a point where we're all making money, right? And that's what the ultimate goal is.
Now, what is that? What do you mean by self-service? What are you doing there?
So we have, right now, we have a self-service certificate of insurance. So an agent or an insured can go and pull a certificate of insurance instantly from their Coterie Insurance policy. We have some self-service stuff, too, that's been released around billing. Where agents and policyholders alike can do their own billing without even having to contact Coterie. Soon to roll out after that will be self-service endorsements. Obviously, those that are of high volume will end up being self-service. In theory, at some point in time, I would love our agents just to sit back and drink a Mai Tai and not even have to worry about anything that has to do with small commercial. We just rolled out this cool new, it's in beta right now, but it's called My Digital Agency, where basically an agent can white label and embed the Coterie Insurance experience. So policyholders can access their website, quote to bind 24/7.
Off of the agent's website?
Yes, off of the agent's website. We're doing a little pre-qualification with that right now because in order for it to be successful, the agent has to know how to drive leads to their website in order for it to be fruitful. But over time right now, I have my team working on I would say smart lead gen to help drive traffic to the agent's website based on what Coterie is most likely to write and what the agency is really good at writing. And that will be something that I'm hopeful we'll be able to roll out in 2024.
How exciting. So what insured is the right insured for Coterie? Is it a restaurant owner? Dry cleaners, a gig worker? Who's a good insurer for Coterie?
Yeah, a majority of our business right now, when I look at our top classes, they're contracting, office, retail, and then restaurant hospitality. About 85% of our business has 4 or less employees. The rest have more. We are moving up market, though. Our average premium per policy has almost doubled since I joined Coterie in March of last year.
Good job.
Yeah, so we're writing larger risks. We took some rate, which was needed, right, in December. We'll probably take another rate increase in early 2024 to help support all the inflationary things we all know exist in our world. But
are you regulated? Can you just take rate if you want to, or do you have to answer to somebody?
No, we're right now we're writing on all admitted paper, so we're answering. Okay. Yep, we're answering to all of the DOIs, and the way we're set up, guys, is we're basically operating like we're a full stack carrier as an MGA. We just don't have the policyholder surplus in the bank to stand up our own carrier.
So who is the distribution channel? Is it independent agents or is there a network of agents you work with?
Yeah, so this is fun because I know, Rob, you had kind of touched on this before we started the podcast. When I joined Coterie, we would basically take any agent as a licensed agent for Coterie that had a pulse. So if you came to Coterie and you wanted to write with us, man, here's a contract, write with us. But as we started to understand our product market fit and our value prop within the market, we really used the middle half of last year to put together a full-fledged distribution strategy. So the majority of our business is through the independent agency channel. A lot of that is coming through networks and wholesale markets, although we do have a lot of what I would say direct contracts through independent agents. We have a ton of more business coming through those larger partnerships in wholesale and network. The other fun thing is, I think one of our value props is how easy our API is to integrate with.
Oh, okay.
When I joined Coterie, again, in March of last year, about 40% of our new business was coming through API. Now that's probably closer to 75, 80%. That's through API partnerships. Yeah. So those could be direct integrations or integrations with what I call commercial lines enablers that, some of the comparators, the marketplaces, that type of thing.
Give us an example of somewhere where your API would exist.
We're in Bold Penguin, Tarmica, Talage, Breeza, SEMC, like all of the small commercial lines comparative raters. We also have seen some new integrations come through on what I would say technology companies that are trying to enable the embedded experience for independent agents. So it's a little bit different in where it's an embedded solution, but it's through an independent agency. It's not direct. And that's very early in adoption. So I would say like the success there is to be determined, but it's been fun to experiment.
We talked to David about Coterie being embedded in QuickBooks and different systems like that. Is that still something you do today?
Yeah. So one of the trends that we saw coming into 2023 was an extreme focus on core operations for a lot of businesses, just because of the macroeconomics and the economy.
Make some money, damn it.
Yeah. And so all this ancillary stuff that people were experimenting with as potential different revenue generators was kind of shut down. So we do have a relationship with Intuit QuickBooks. It's looking a little bit different than it was before. Not necessarily like a flow, but more of a data relationship. I think that embedded relationship could come back to fruition over time. But to be honest with you, like late last year, early this year, all of those leads on what I would consider to be more like direct embedded really fizzled out. And even before then, we were seeing extreme growth coming through the independent agency channel more than anywhere else. So we've been really working hard more to support independent agents that want to embed versus us trying to do the embedded relationships ourselves.
And when you say want to embed, that is that you use the API to put it on their website.
Yeah, or independent agents are using some of those enablement partners to help them embed their experience within another website, right? And so in some ways, it gives independent agents more optionality, because if they have more carriers on API than just Coterie, when we decline, someone else might say yes, which ultimately leads to a better experience for that embedded partner too.
Sure. And they want that because they don't want the prospect to walk away.
Exactly.
Right. Exactly. Yep. So I want to talk for a minute about being a chief growth officer, because I mean, in just listening to you for a few minutes, I think Lee would agree. We've had other chief revenue officers on. I mean, you sound very well educated in it. So tell us a little bit about why that is, or did you just wake up one morning and have all this vast knowledge? It's a Wisconsin thing. I mean, you live in Wisconsin. I mean, you live in the insurance capital of the United States. So
yeah. Well, first, thanks for the compliment. I appreciate that.
Sure, I mean it. I'm serious.
I think I've just been very fortunate in my journey, in my career, to be in the right place at the right time to gain the knowledge that I have today. My job at Coterie is not only to help us grow, but to make sure we grow profitably. So I have the underwriting division as well as the sales and marketing team under my leadership. And more of my career has been spent in commercial lines underwriting than it has been spent on business development, marketing, and growth.
So you're an insurance person.
I am an insurance nerd to the T. I think I get more excited sometimes about some of the automated underwriting that we're doing than when we sign a new big partner, which I love the new big partnerships and those whale killing things. But insurance has just been ingrained in me. And so twofold, I was fortunate enough to work with some very large partners in my last gig on the legacy carrier side. So there's just a lot of relationship building and networking that I was exposed to. I also feel like I was very early in my career, I was exposed to strategic planning and thinking strategically as an insurance professional, which ultimately at Coterie, what I've noticed is that strategy has to change a lot more quickly in a startup because of multiple things changing around you, right? I was off of work for a week earlier this month. I felt like I missed a month of change at Coterie.
It goes so fast. Everything changes so quick, I would imagine.
It does. Absolutely does.
Yeah. I mean, until you guys are kind of done, you have to be so responsive to all these other factors. and this is not just Coterie, it's all startups, you're being pushed around.
Yep.
Right? And pulled around, pulled and pushed. And not the least of which I know are your venture backers who are like tapping their foot, on the ground.
Well, what I will say is our venture backers are awesome to work with. I think that they've done a really good job of appropriately challenging us as a team without being crazy about it, which has been refreshing. And then, we have large partnerships, right, that we want to make sure that we keep happy because they're producing for us at scale on a regular basis. I would say one of the things that we can hang our hat on for now is we just have a really great diversification of our distribution portfolio. So we're not heavily reliant on any one partner, which wasn't necessarily the case when I joined. And we are diversified as such. If the market, for some reason turns in wholesale, we have a big enough direct and a big enough network to work with where we won't be heavily impacted by any swift changes in any one, I would call, sub-channel of the independent agency channel.
That makes sense. I want to go back to where you were talking about how you also oversee the underwriting side.
Right.
Whenever I think about growth officers, chief growth officer, I think about the marketing side. I think about the sales. I don't think about somebody overseeing the underwriting. What do you do there? What does that look like?
So right now it's a lot of I would say roadmap building on what do we need to do to our insurance product in order to drive growth for us moving forward, as well as protecting our loss ratio. So it's an interesting balance. I think it's a hybrid role that you don't see very often because usually they're in conflict with one another.
Typically, yes.
When I was primarily underwriting in my career, I developed this reputation for fixing books of business, right? So anything that was a pile of junk and it was on fire, Bobbie, come in, you figure out how to fix it and bring it back to profitability. When I look at my underwriting team today at Coterie, all of them are probably a little bit more or a little bit less conservative than what I would be from an underwriting perspective. So really trying to push, because we have this in the box automated underwriting engine, really trying to push being conservative, especially when the insurtechs ahead of us have really blown up loss ratios. I want to make sure that we really keep that contained. On the other side, which is really cool, every single one of my senior most leaders on the growth team has underwriting background. So they're coming even to my underwriters and saying, hey, we're seeing this partner write way too many convenience stores. Will you dig into that? I'm not feeling comfortable with it. Mm-hmm. So there's this nice kind of push and pull between all of my team members, which is amazing. It's just a really fun dynamic to watch and to lead through.
It's been interesting for us being around in this space for the years that we have, seeing how companies like yourself and others, insurtechs, have grown up, right?
Yeah.
Because you grow up or you blow up. Maybe I should probably copyright that.
You absolutely should.
I absolutely should.
You should. I hope it's not already copyright.
It probably is. Anyways, we're seeing it today. We have carriers that are insurtechs that are pausing on writing altogether, that are trying to catch up, that are writing at 200 combined ratios, and it's of course unsustainable.
Yeah,
of course, and there's a lot of hope and prayer for the future, but the future is here now, right? And if you buy business, you're doing just that.
Yeah, absolutely.
And so it's very funny. I love the story that, I'm looking at your resume. You were an underwriter for 11 years, what I see, right? Or something like that, a long time. But you're an insurance person who's come to insurtech, as opposed to a technology person who's come to insurtech. And there's something the matter with that. But I don't care what the technology is. You have to know what's going on in insurance or it will eat you up.
Yeah. Absolutely. Well, and the funny thing there is our team is pretty balanced from a senior leadership side. About half of us are from insurance and the other half are from tech. So I see more of the push and pull there between the tech and the insurance minds than I do between the underwriting and the growth minds.
Sure.
Yeah.
That's interesting. And how's that going? Tell us about that push-pull between tech and and insurance?
If I rewind to back when I was like a director in underwriting and dealing with sales directors, it's very similar. It's grown from the insurance growth, butting heads to the tech and the business side butting heads. And a lot of it has to do with, business needs versus agile development. And how does that work into an industry that is very dependent on dates, right? Like I'm filing a new rate for 1/1, like that absolutely has to be done by then. So, but it also opens up, I think, just the insurance business person's mind to thinking a little bit more like a tech agile versus legacy. We need to take, 20 years to make a decision before we can move forward. We're making decisions faster because the tech side is really, kind of influencing faster decision making out of the business.
Do you go out and find agents? How does that happen?
So the fun thing about where Coterie's positioned right now is we have the demand for our product is larger than the supply. And when I talk about the supply, I know it's fun.
Wow.
When I talk about the supply, I talk about controlled growth. I don't want to grow so fast that we end up with a profitability issue that we couldn't recognize soon enough to rectify proactively. Mm-hmm. And then secondarily is the servicing and the service automation side. So with those two pieces, we've been controlling our growth. We do have a high demand for our product. We have a lineup of agents just waiting to get onboarded and activated. But we do have, I would say, about 3 people that their full-time job is to hunt and onboard and activate agents. And then we have 2 other folks where a smaller portion of their job is hunting for like big whale type of opportunities. But
like
really,
Aon or the majors.
Yeah, the big ones. We have a pretty lean acquisition team, in my opinion, and we've been very fortunate enough to have such a great product market fit that once an agent sees the demo, they're super impressed and they just want to sign up.
Do you pick and choose where you want to write? I mean, these states are more interesting to us than these states.
Yeah,
that kind of thing.
Rob, we're actually just kind of building out our product mix growth plan for 2024. So from the insurance side, similar to what it looked like when I first joined, like we were just taking what we could get, right? And that was happening for a while in insurance. Like let's just grow where we can grow. But now we're really starting to dissect that and get very intentional about we need to grow faster in these areas than in these areas for diversification of portfolio and cat strategy. Or we want to grow these classes faster than these classes because we're seeing too many restaurants, as an example, come through, where we want to kind of balance out the casualty exposure that comes with restaurants on liquor and slip and falls with some, I would say, like easier appetite classes, lower loss ratio classes. So we're really starting to get enough critical mass within our book to start to make those decisions around mix of business and then start to drive that through our growth team and through our partners. We have several partners who have national presence or multi-state presence where we can tell them, push the pedal down here and tap the brakes here and help us manage our portfolio.
So what do you mean by the demand is greater than the supply?
I could sign up a lot more agents on a monthly basis than I do today. But I choose not to. And we have our team like really kind of metered in our growth and how many new producers we activate. So we don't grow so fast that we break the servicing side or our profitability.
And is that because word gets out organically or you're marketing heavily and that's just a wide net? I mean, how does that happen?
I think organically during the first quarter of this year, word had started to spread where we're not quite hunting as hard as we used to in the past, but more triaging what's coming in than we have been. So it's fun. It's a great position to be in.
For a chief growth officer to be able to be choosy, if I'm using the right word, is like kind of a dream, right?
Yeah. Yeah.
No, I'm sorry. We don't want your business.
In a very nice tone, of course.
Yes, absolutely.
So I want to shift gears for a second here and talk about that whole side of the business. And so we're very involved in target markets. I shouldn't say we are involved in target markets. Lee's involved in target markets, aren't you, Lee?
I am.
Are you going to target markets?
Yeah. Target market conference, target market discussions, things like that. What about y'all, Bobbie? Is that something that y'all attend?
Yeah, I won't be there this year, but we will have two folks from our team attending, mostly around just looking for additional capacity partners, right? So like one of our barriers to growth is not only like servicing and but over time, but it's just like, what's our capacity from our fronting carrier partnerships? So there'll be some additional discovery that goes on there. If anybody's listening in and it's going to be at target markets, and it's like, yeah, Coterie, I want to talk to them. Feel free to reach out to me and I'll make sure that I broker a meeting between you and the folks that are going to be there from Coterie.
I think that's really important because a lot of people don't realize that getting the capacity is this whole hidden thing to writing insurance. You have to be able to have the reinsurance and the funding to be able to write these policies. And I think a lot of people go to target market for that so that they can meet these other entities who can issue additional capacities. And it sounds like that's something y'all are doing there.
Yeah, that's going to be the primary goal. I think ancillary to that is even some of the work that you're doing, Lee. Like, are there different firms that we should consider as part of our, our tech stack or our servicing stack that would make sense to integrate into the Coterie model? But yeah, I think those are two top of mind things when I think about target markets for Coterie and what we'll leverage it for this year.
Yeah, I know that like you guys recently did a deal with ZestyAI.
Yep.
What's that about?
So Zesty is now within our portfolio of data vendors. So when we have that name and address entered into our dashboard, or if it comes through our API calls, Zesty will be one of the third-party data sources that we call for both underwriting and rating information. Yeah, so we have, I think, 11 right now that are in the lineup. We'll be looking to continue to iterate on that, whether we add new ones or, retire some that aren't working well for us. That will be something that we can continue to refine through our data organization at Coterie.
Yeah, it must be interesting figuring out, and sometimes sad figuring out when you have data that's not helpful.
Yeah.
Because that's expensive, I would think, typically.
Yeah, it's expensive in the short run, but I think over time it will help us scale. What's fun is we're collecting data on which fields are overridden most often by agents. So then we consider those to be of low credibility, and which fields aren't being overridden at all by agents. And at some point in time, I envision that there'll be some fields that are locked down because we know that with 99% certainty that the data here is right and is probably more accurate than what a human could give us through our portal.
If you're at a conference like Target Market, you're meeting with carriers or fronting carriers or whatever you guys call them, capacity providers, what's important to them that you guys are underwriting well? Is that kind of their number one concern?
Yeah, it really comes down to them understanding what's behind the automated underwriting engine, what kind of rules that we're using, and making sure that our underwriting rules align with their philosophy. Like, full transparency, some of the more legacy partnerships that are out there are very, very legacy driven from an underwriting philosophy standpoint. So those sales are a little bit more difficult because it is a very different way of underwriting risk that I think our industry just hasn't gone through the change management curve in really believing that it works.
So, I was just thinking, why don't we talk a little bit about you? You have been underwriting since 2003, I think I read. So you've seen over almost for 20 years, you've been in and around underwriting. How has underwriting changed with the increase in technology and APIs? Has it changed? What do you see?
Well, so when I first started as an underwriter, I remember ingesting change requests on carbon copy paper that came through the mail. So just the speed at which we get information to underwrite is faster, right? Just through the different channels. I also recall when predictive modeling was first introduced to underwriting, and that was predictive modeling just on basically your discretionary pricing, right? So this risk is less likely to have a loss, so you can feel more comfortable putting credits on it, versus this risk is more likely to have a loss, so you should put debits on it, but still within the acceptability. I think the trend over the last 5 years, which Coterie's kind of cracked the code on, but a lot of carriers are trying to catch up to, is like, how do we determine which underwriting questions are actually relevant and drive claims issues, and which ones can we eliminate? So I think everybody right now is trying to be like, how do we ask the least amount of questions as possible,
right,
to provide a quote that's bindable?
Right. How do I do it in 4 questions? Which to me seems silly. Is that really possible?
Yes. At least on the small micro commercial. I think it'll take us longer to get to middle market because the data is not as available for us to pull from third-party data sources. But a majority of the underwriting inputs that are needed for small commercial lines, you can pull from a third-party data source today.
What is important? What is important whenever underwriting a small commercial?
I'm going to refrain from answering that because I think that's part of our IP.
Hey, good answer. That was a test. That was a test.
Hey, I'm sorry.
Can't take me anywhere.
You know, one of the fun things that I discovered at my last legacy carrier when we were doing an integration with a comp rater for commercial lines was like, literally, Bobbie, your carrier is asking this question, and every single time the agent answers yes. Every time, 100% of the time they answer yes. So even if the answer really is no, they're still lying and saying yes, or they're ignorant and they're saying yes. So why don't you just remove this question from your question set? And I think that's something that all of the comp raters are kind of forcing and pushing on to carriers to review those questions, where this question's literally answered this way 95% or more of the time. Do you really need an answer to it? Or can you just assume it's a yes or no? Right?
I want to ask you a question about disruption. When we started the podcast, that was a word you heard a lot. And it was a word that we heard people that we were interviewing say, right?
Yeah.
We're going to disrupt insurance. What's your take on that now in 2023? Companies like Coterie may have, I'm not saying you did or you were, but insurtechs like Coterie certainly could have been those who said, oh yeah, we're going to disrupt insurance.
Yeah.
Is that how you look at it? Or is it just, we're just doing it in a more modern, more efficient, more clever way? How do you look at that?
I think disruption is hard, Rob, because we are so heavily regulated, and there's 5 or 50 different departments of insurance that all have different rules that we have to abide by, right? Mm-hmm. So outside of disruption, I would frame it in the thought process of influencing rapid change as quickly as possible. I think the ability to disrupt is almost not impossible in our industry just because of how much it's regulated. And because there are so many different players that have a say in how you price, you rate, and you distribute business. Like if you think about Coterie itself as an MGA, we have 3 fronting carriers, reinsurance, 50 departments of insurance, our own underwriting biases within our doors, and then market opportunity. All of those things play a part in that. So to completely disrupt is almost impossible. But I think we have figured out a way to influence meaningful change within a small segment of the market, and kind of change the paradigm at which agents do business. But have we completely blown it up and disrupted it? No. We're still doing the filings the same way we always had to, right? And it's the piece, I think, of the experience for both agents and insureds that we've solved for injecting the most efficiency in the quote to bind experience, where a lot of the money was being lost, and then secondarily where there's more waste is in the servicing side, and that's our second solve that we're working on right now.
So I'll use the term that you just said. Do you think that meaningful change is a better word than disruption?
I think so.
Meaningful change is actually 2 words, Rob.
Good job, Rob.
Thank you, everybody. Really, no, I'm here all weekend. That's a better phrase.
Yeah, I mean, disruption. I think it just causes defensiveness, right? Especially with legacy carriers, like, oh, you're not going to. And then,
right.
If we talk about meaningful change, that is a collaborative term that I think we can all get behind. And I'm having discovery calls with some legacy carriers around just strategic conversations, and how we might be able to help each other 3 to 5 years from now, right? And how do we plan for that? Because what's been inhibitive of the legacy carriers making progress is all these stinking core system transformations they're going through.
Yeah.
And they get locked in this 3 to 10 year time frame where they can't do anything. Yeah, they literally can't do anything but do like parity, right? They're moving from one system to another in parity. And I think in the next 5 years or so, 3 to 5 years, we're going to see a lot of them come out of that. So they're going to come out of this core system transformation and ready to play. And I think that there are a lot of opportunities for partnership, not necessarily like disruptive, combative players in the marketplace.
Do you see those type of carriers at target markets? Are you talking to those kind of carriers who've come out of the transition?
Not yet. I'm talking to more friendlies based on my network. I think that will be like a 2024 conversation once I get a little bit more discovery done with what I would call my friendly network of carriers. And then 24 we'll have more meaningful discussions around that type of stuff.
Right. But as we all know in the insurance industry, you can have enough relationships to make a business.
Absolutely.
Right.
Absolutely.
And to use up all your capacity, whatever you're selling or whatever product you're providing. That's what an intensely important relationships are in our industry.
Yeah.
It's pretty terrific, actually.
It's super terrific. And I will tell you, I haven't even tapped into like my next layer of my network for independent agency growth. Like we haven't even had to get to that level yet. So
that's amazing.
Yeah. So if I think about like rekindling those relationships over the next year, 18 months, there's a lot of upside.
Well, we don't know your other C-level people at Coterie, but I'm sure I speak for David McFarland when I say that he must love you.
We get along pretty well. And
I mean, you're smart, you're experienced, you understand the insurance side well. And gosh, I remember so many insurtechs saying to us, we're not an insurance company, we're a tech company. And I understand that, but because it's such a bizarre, weird product, what other product is like insurance? Exactly. That's my point.
Yeah. Banking is the closest. Banking is the closest, and it's not that close, right?
Yeah.
It's not that close, right? You don't give the bank money and not expect to get it back.
Right.
You're not betting with the bank, which you are with insurance companies.
Mm-hmm.
It's like, yeah, I'll bet that much money that will be okay. And the insurance company's like, yeah, I'll bet this much money. You won't have a claim.
That's right.
Mm-hmm. So it's pretty cool. Well, what a pleasure to have you on. This has been great.
It has been great. Thanks, guys. Always enjoy just the floor to tell the Coterie story, as well as talk to other insurance nerds like me. This fills my cup. So you filled my cup for the week. I'm full of energy and ready to go.
That's great to hear.
You also, please put in a plug for your podcast that you're competing against us with.
Oh,
Shame.
Coterie's podcast is called And I Quote. You can find our episodes through our website or on YouTube. I was the co-host this season along with Ashley from my team, Ashley Burden. So there's some really good content out there. Not quite maybe as good as FNO InsurTech, but almost just as good.
No.
Too kind.
I think we can all just take a moment and recognize that. But one of the reasons that I had to have you say that or to plug it was I love the name.
Yeah, and I quote. I actually don't even know who came up with that. That was already established by the time I joined Coterie. So I'll have to figure that out and give some kudos.
It's a great play. Great play.
Please say hi to David for us.
I will.
Yes.
Absolutely. I'm sure he says hi right back. And thank you again for the opportunity to highlight Coterie.
And in a year or so, we'd love to have you back and hear about, this great deal where you have more demand than supply.
Yes. I hope that storyline continues, and I would love to come back next year at this time.
Okay.
We love it.
Thanks, you.
Guys. Appreciate it.
Bobbie.
One of the great things about doing this podcast is we get to be around super smart people.
Yeah.
She's a super smart person.
She is a super smart person, and she is a delight to visit with. I could tell she just has this bubbly joy in that she really enjoys what she's doing.
Totally.
That always makes for a great interview.
her grasp of the market and what she's doing is awesome.
It is. It is. She knows what she's doing, and she has a big job looking at not only the growth of the company, but with an underwriting. I mean, that's a big job.
Big job. Big job. Could you do that?
No, probably not.
I don't think so. Could I do it?
No, I don't absolutely not. But she can.
Absolutely not.
She can. But you, absolutely not. Absolutely.
More accurate, I wouldn't want to. So, because it's too much.
It's a big job.
I'm glad that Bobbie's there to handle that. And all the way from Wisconsin. And we're glad you guys were all with us today. We're glad we have two producers who help us to do everything so that we can basically be lazy. And I even thank Lee Boyd, even though he's been very mean to me today.
I have been so nice. You're the one who's been
so mean.
You're looking for a fight. It's like you woke up this morning looking for a fight.
Oh my God, so mean. So until next time.
Goodbye, everybody.